Hello there, this is fairbinaryoptions.com, and I think that the title of this analysis speaks for itself. We are looking to buy calls on the euro US dollar, even if this is a clear downtrend from my point of view. But we are looking to buy calls based on this consolidation area that price is forming here, and this one resembles with a classical zigzag that already made an A and a B and now looking for a C to the upside. Normally I would favor the downside on the euro dollar, especially that this week is important in terms of the ECB coming on Thursday, and there is intensive talks on the market that they will cut the interest rates, or at least the tone would be negative or bearish for the euro, as the euro dollar, for example, here, as you can see, was flirting with the 138 area almost all last week. But we still need a correction on the short term. So with end of day expiration date, I would like to buy calls for this pair, and then maybe starting with Wednesday or with Thursday to engage into buying puts for end of week expiration date, but that is already a different analysis. Now this move to the upside here is the recent top into the 138.30 area. It has come under an impulsive move, and this impulsive move has been made with a spike higher after this contracting triangle here. This contracting triangle here most likely signaling a fourth wave type, and by the time you have a fourth wave type and the fifth wave type here, everything has stopped here. Now the problem is, if you are trying to analyze the move from the right side here of the highs until the lows to the downside here into the 134 area, so this is almost 400 pips that price dropped like a rock to the downside in something like, take a look here, from the 25th of October, and now it is the 5th of November, considering the weekend. So in one trading week, less than one trading week, the price dropped like a rock 400 pips. The sparkling move of this whole move was the CPI announcement in Europe here. By the time the CPI has been announced, it was coming at a 4 years low. Then the real move, the real sell-off began, but not until then. So if you analyze the move before then, you are seeing that this is clearly not impulsive, but this here is impulsive. It means that we have two different moves within one move. So basically this pattern here, this one here, should be labeled as a zigzag. And this zigzag should be formed out of wave A to be done here, something like this, A. Then of course a B wave to the upside that corrects the previous move. This B wave to the upside has been after the FOMC last week. The FOMC statement has been released, and then the C wave to the downside. So A, B, and C wave to the downside all the way here, and this should be considered an impulsive move. Like any impulsive move, should be formed out of 5 different ways: 1, 2, 3, 4, 5, with a spike to the downside. So of a lower degree, this one should be labeled 1. Let me change the color for it and also make it a bit smaller so that we know that this is of a lower degree. And of course the second wave somewhere around here, either to the upside here or here, it doesn't really matter, as long as at least one wave is expanded more than 161.8 out of the next longest wave. I would say that the third wave goes all the way to the downside here, and the fourth wave of course will be here, and the fifth wave yesterday, with the strong retail sales in Australia making the euro and Australian dollar to dip to a new low, and of course dragging the euro US dollar as well to the downside, to the downside there. So again, A, B, C for the zigzag, 1, 2, 3, 4, 5 to the downside, and basically from this moment of time we should look for a corrective wave. So this would be the fifth wave, from this moment of time we should look a corrective wave to come and correct, if I may say, a corrective wave to correct this ABC to the downside that ended here. Now if this ABC to the downside that ended here is a zigzag, then, or a three-ways move, then we have different possibilities for this correction here. First of all, if you take a Fibonacci retracement from the highs and to the lows here, because this is a three-ways move, you might consider that we have a possible flat to the upside. And in order to have a flat to the upside, the condition for a flat is that the B wave should retrace more than 61.8%. Now, 61.8% retracement comes pretty big, pretty much almost 137. I'm not sure, I don't know if price will retrace to 137. It might do that based on the outcome of the ECB, but it might also be the case that any spike to the upside to be considered just an X wave, and this to be ABC X and then another ABC to the downside. I would kind of favoring the second option, so looking for an X wave of this degree to the upside, and this X wave to be an intervening X wave or just a connecting X wave, but still implies higher values, and from my point of view not necessarily 136, but between 35.50 and 36. This should be an area price should visit, and this should be an area where I'm going to consider buying puts for end of week expiration date or for 1 week expiration date. But until then, the logical thing to do here is to buy calls with end of day expiration date. So this is Tuesday the 5th of November 2013. We are buying calls with end of day expiration date. It remains to be seen what the market will do, but this is our strategy right here, right now. Thank you very much for being here. Keep in mind this is fairbinaryoptions.com, and our analyses are available here due to the help of our official sponsor, Lioneye.